Bonjour VivaTech, bonjour Paris. Thank you so much for joining us this morning for the launch of our annual Global Startup Ecosystem Report, which will give you a very comprehensive picture of what's happening in the world of startups from a global scale. I feel very privileged to be here for the second time, having had the opportunity to present last year. What a bumper year it has been. A story of recovery after the big funding winter we've been talking about, suffering as entrepreneurs, as investors over the last few years. A story of unprecedented dynamism, and we'll unpack that for you in a moment. And also a story of a huge shift in value to North America. Let's get into that in a little bit more detail. But I want to take just a few seconds with a huge shout out to the 140 or so plus ecosystem agencies, all the contributors, our partners all across the world, such as La French Tech and many others, who contribute to the report, to the insight that we do for entrepreneurs. Hundreds of incubators, accelerators, and more than 100,000 entrepreneurs themselves all around the world who have given us their voice and contributed. So a big thank you, merci, to everybody who has been contributing to it. Without further ado, rankings first. That's always what everybody wants to see from us. No big surprises in the top group. Silicon Valley, New York, London, the usual suspects when it comes to the top group of startup ecosystems. Below, a lot of flurry, a lot of change in our top ranking. These are the top 20 in the world. If you want to summarize it a little bit, US ecosystems, even the ones outside of the top group, outside Silicon Valley and New York, up. Asia, particularly China, down, summarizes it quite well. Few surprises in there, but that's the big view, and we'll unpack why this is happening, of course. Emerging rankings, those aspiring startup ecosystems that we rank differently all across the world. What's happening here in the top group? Mumbai first, Istanbul doing really well. And it is a bit of a European story, European continent story at least, including with the UK and Manchester, Liverpool showing a staggering performance. So really good news from a European perspective when we look at our emerging rankings on the up, good dynamism. We're glad to see that. Key findings of our report overall. Major driver is AI. No surprise here, but we will go into the detail, and I promise you that's going to be really interesting. Ecosystem value, huge shift to North America. Again, we'll unpack what is happening here. Funding, Series A, up. Really, really good what we are seeing. Late stage funding, okay. A lot of dynamism and seed, and I want to unpack all of that for you in the next 9-10 minutes or so. First story, AI native. What is that? What are we talking about? We did a piece of research coding all startups across the world that we could possibly find into different categories of AI, trying to separate them from the rest of tech. So what is native AI for us? A business model that at its very kernel in the tech stack could not live without having AI applied to it. These are the ones that we grabbed. We wanted to show what is happening in this part of our global startup ecosystem community. Staggering 507% plus in ecosystem value growth in native AI. That's, if my math is correct, about 12x of what the rest of the tech startup ecosystem is producing, bar in the middle. And if you put that in a long-term perspective, a little bit into the context of an economy, Europe grew over the last 5 years as an economy by 30% GDP growth. AI native 500% plus. It is staggering the amount of value that is being created in that segment. And if we predict this a little bit further, we are in 2026. By 2030, we believe, that's our prediction model, that AI native will be the biggest contributor to the tech, the biggest part of the tech economy. And how big is that? The tech economy this year is about $10 trillion in ecosystem value. AI native is going to catch up with the rest of tech no later than 2030. We are very, very sure of that. So huge dynamism that's happening. I spoke about value shift back to North America. When we started out at Genome, we tried to bring insights so that many startup ecosystems outside of North America, outside the top 10 group, could participate and entrepreneurs would have a chance. And we always believed we are in a good way. Really, the concentration came down over the last decade since we are doing this research. This year it has shifted very considerably back to North America. And what you see here, Purple bars, that's ecosystem value this year, and the little diamonds in the middle, that's the ecosystem value last year. And just look what happened in North America. They added 2 trillion or so in ecosystem value within a reporting year's period. It's incredible. Whilst the others, Asia, Europe, Latin America, Oceania, and so forth, yeah, we see some growth, but it's marginal in comparison. What makes that picture, for me, even more striking, staggering, sometimes a little bit scary, is of that overall ecosystem value growth, North America, 3 cities, Silicon Valley, Los Angeles, and New York, are contributing 66% in ecosystem growth globally in that space. It's incredible. We ought to talk about funding. Last year I was standing here talking about the funding winter post the inflationary bubble, cheap money chasing investment post the pandemic period. We had a depression when it came to access to funding in seed and Series A and late stage. That picture has changed. Last year was stable, but look at the last quarter, Q1 2026. It is up very, very significantly, and our predictions show we are very, very confident that this year will be a staggering year for Series A. Investment growth really happening on a global scale, but again, with a focus on North America, the North America region, light blue on the top, and the dark blue, that's us here in Europe, also doing extremely well when it comes to the growth trend in funding. So hopefully we are past the funding winter. All the indicators are hugely positive. Seed, my particular darling, because seed funding in the end tells us what's happening in the next generation of startups, right? Am I, as a founder, getting the money that I need to form and start growing my business? 2025, looking okay, but when it's the second bar from the right, when you look at it, seed funding is notoriously hard to capture. Angel investment, seed rounds that are not disclosed. So we are only seeing in our data about 50%. There's a huge data lag. We apply our prediction models, and we believe, we are very, very sure with this prediction, that we will see a staggering 2026 for seed funding. So really good news for those that are coming into funding their businesses for the first time. We believe it's 2x of what we saw last year in seed funding. Seed funding is back, confirms the story of funding winter over. We are back on track. And last, just to round it out, the other perspective from early to late stage funding, Series A plus B, C, continues to grow steadily. Look at Q1 2026. Even if you take out, we are talking north of 200x billion in late stage funding this year. Even if you take out Anthropic and OpenAI, you still see very, very significant growth. So overall story amongst the data, funding winter hopefully over, and we are really looking positively into the next year. Again, hugely driven by North America and partially in Europe, but North America being the big growth story. Exits. Exit values are increasing as well. Important story for us as entrepreneurs. Are we able to get to an exit, to a sizable exit? Can we recycle our capital? For us as venture investors, can we recycle the capital we've invested? The last 3 quarters or so looking extremely good. Second from the right is a bit influenced by a large Chinese exit. But overall, the curve is absolutely positive, so we're really, really bullish about it. North America leading an exit deal size, no surprise here. For European visitors, for our politicians in the room, we ought to do something about exit, the ability to exit, to get to stock market valuations. In Europe, what you see here is the top quartile of exits in the respective regions. And the little blue thing in the middle of these bars is the median value. The median in the US is roughly equivalent to the very best quartile of exit values that we see in Europe. And that tells us a long story, what's happening to capital and being able to exit, have sizable exits in Europe. We ought to do something here. Hugely positive. IPOs are back. And of course, hugely important because IPOs gives us as entrepreneurs the ability to recycle capital experience, go for the next venture, become an angel investor and mentor, and of course for the funds also to recycle their capital. It's particularly the IPOs, that's the darker blue shade here, it's extremely strong this year and trending further up. So IPOs back, public IPOs, the important message. And to unpack a little bit apart from all the financial data, what is happening in the world of different sectors of tech. Talked a lot about AI already. What we show you here is two things. On the y-axis, the young money Series A funding count. These are young investments, right, going into young companies. So you want to be up on the chart as a sector. That's where the dynamism in young startups and investment is. Horizontal axis, exit count, mature companies going for exit. So where do we really want to be as a sector on the upper right-hand side? And no surprises here. AI native, out of the charts, right, when you see where we are in terms of dynamism. We got the exits, but we also got the new money going into new ventures. That is the story of AI native this year. The second one is new. We never had it before, but for obvious reasons, we started coding and researching on defense tech in a very narrow definition. This is really exclusively defense tech. And you can see it's the second one here in this upper right-hand quadrant, so extreme dynamism in defense tech. Maybe not a surprise, but we can see how the tech industry, our global startup ecosystem, is taking the challenge and contributing to defense as well. So these are the clear highlight stories. The rest, all these other sectors, AMR, advanced manufacturing robotics, fintech, clean tech, very, very, very flat, right? Just look, they're all on the horizontal axis, so it's not that dynamism in it. It's really a story about very, very few sectors. Almost a little bit, to me, astonishing, worrying that we don't see more happening in the rest of tech. Certainly surprised us a little bit. That picture looked very, very different only 2 years ago. Yep. Let's unpack AI if it is so important. What we did again, we looked at AI as a total globally. We tried to differentiate a little bit. Who is really bringing the growth? Is it the model builders? That's MO on the left-hand side. Is it other derivatives of model builders, M1, M2? Is it the business application, the apps that are using AI to solve a business problem, to provide a service? That's B for business. Or is it the infrastructure, the cloud providers? I think the picture speaks for itself. So the big models, minus 52% in growth. I think the battle of the big models has been done. I think investors are realizing that. And unless we come up with something completely new, maybe local compute edge, I think we want to see much dynamism here again. The story is playing out entirely in the applied AI and the apps businesses. And if you go back in history, it's maybe the transition from, I don't know, packaged software to SaaS. Or from, we got Netscape, and all of a sudden somebody built a little bookshop. I think he's speaking later today. That is happening now in the space of the AI apps. And it's really important, particularly for those that are ecosystem builders amongst us. What can you do to participate in that trend? Agentic AI, can you bring in corporates, enterprises, solve their problems with startups helping to solve their problems with agentic AI, with applications AI powered? That's where the growth is. That's where we expect the value creation over the next few years, as enormous as it is, as I showed you just very early on, is going to happen. So really big takeaway. And again, the shift, where's the new money going in, where's seed money going in at the moment, is all the countries mapped out for AI on the right-hand side, dark blue last year, lighter blue left. In France, in the United States, in the UK, in Singapore, everywhere across the world, we have this fundamental shift towards much faster funding rounds and much bigger checks. What we are seeing is interesting. Series A venture funding all of a sudden is going into seed. That's why you see these big rounds in seed funding in AI native, coming at a velocity, funding velocity, the speed to the round that we've never witnessed before. So investors, rounds are going towards seed, they're going earlier, they're going much faster, and the ticket sizes are much bigger. And that's a very consistent picture. That's it as a brief summary of what's happening in the world. Thank you for giving us the opportunity to show you these trends. We will be picking up the conversation, and particularly the one, what can we do as ecosystem builders, as politicians, as policymakers, to support the growth of AI and make sure it is happening all across the world and we participate all across the world. We'll be picking this up, this conversation at the Global Entrepreneurship Congress happening a little bit later in the year in Doha. I'm very glad to see Jonathan, our dear friend from Global Entrepreneurship Network. Say hello. We will be picking this up, this discussion. We invite you to join us there for policy discussion to see what can we jointly do to further the story of entrepreneurship and success in native AI. Without further ado, it's my great pleasure to call to the stage our own distinguished Samantha Evans, who has got the most distinguished panel of speakers for you to unpack what we saw in data just a few minutes ago. So, great pleasure to have you.
Thank you.
Thank you.
Am I on? I'm on. Okay, great. Good morning, everyone. My name's Sam Evans, and I am the Managing Director, thank you, of Startup Genome in the GCC. And I'm here today with a great panel. For those of you who don't know who we are, a Startup Genome, we are a world-leading innovation ecosystem advisory firm. So what that means is that we work with different governments around the world to make sure that entrepreneurs can scale no matter where they are, and make sure that the policies, the investors, the corporates, the buyers are all working together to make sure that entrepreneurship is successful, and you don't have to just live in the valley. So today I have a great panel of guests who can cover all these different things that we look at. So I'd love to welcome Jarek, CEO and founder of DeepL. We have Elodie from Hub 71 in Abu Dhabi. Please take a seat, sit wherever you would like, Jarek. And we have Suzanne from Sovereign AI based out of London. And Naofumi from JETRO in Tokyo. Thank you, everyone. So the session today is about where is the next wave of AI innovation really emerging? We've seen in the data that Stephan's just showed that a lot of AI activity is being concentrated in China and in Silicon Valley, which is not surprising. But we don't want to sit back and wait to see what happens in the Valley when we're living in the rest of the world. So I'd really love to dig deep into that. And we have a very conversational panel today. Everyone has some great insights. And we really are looking at where globally competitive AI companies are emerging from, and what conditions can we have in different ecosystems around the world to make sure that every entrepreneur can really strive and be successful. I'm going to begin with you, Jarek. I always begin with our founders on the stage first, because they're the most interesting people normally, because I'm usually on with just policymakers, usually. Today we've got a great panel.
You just want to put me on the spot.
Jarek, congratulations on just winning the Entrepreneur of the Year in Germany. So well done for that. It's an honor to have you here. You built DeepL from 2017, right? From Cologne, if I'm correct. Now 200 billion investment or valuation, 200,000 customers. Can you talk a bit more about what were the conditions that allowed you to grow in that way when people didn't know what AI was 10 years ago?
Yeah, I think our edge actually was that we have been applying AI and using AI at a point in time where this was technology that was not known to this world. That was something fresh, that was something new. We didn't advertise it back then even so much. Like, you wouldn't find AI on the website of DeepL because people were more like scared of that. What is it? But we have been already leveraging that and using that for our products, and I think that has allowed our products just to be much better than anything else on the market, and us being able to just really have this viral product-led growth that we have enjoyed. So that's that. But then on the other hand, like, obviously we came in at a point in time that was really SaaS dominated. So it was this kind of merge of the SaaS model and the business models of back then and the AI technology that has helped us, but also something that we had to navigate. And then also the next wave when AI came in and SaaS stopped being the interesting thing that you would be talking of in this keynote before, we had to also like really shift gears as a company or change direction in some ways.
And for those who don't know what DeepL is, one, you're a fantastic partner for us. So we will be using, or we have been using DeepL as an organization, and our report will be in lots of different languages, thanks to Jarek and his team. Can you explain a bit more about how you've grown to that many customers and how the conditions within your environment, how did you get there?
Yeah, basically, DeepL has started off as a translation platform that was mostly used by prosumers out there in the world. A little bit of consumer usage, a lot of consumer usage in Japan, which obviously has a kind of slightly bigger language barrier to go over. And we have been helping a lot of people to communicate, and this kind of grassroots movement, they took it into their companies and they started figuring out, how can I use that in our business for making things better, for making things easier, for going into new markets, or just making communication between different offices more simple. Like, let's take a company that is manufacturing in India, but all of the headquarters are in Europe. And how do we figure out communication internally? And that has been moving more and more into this direction, from kind of a prosumer product loved by millions and millions of users, into a very kind of serious tool that you'd be using to translate the most significant and most critical and vulnerable texts or documents in your company. Like, we have airlines that are translating their airplane maintenance records with DeepL automatically. So the requirements on AI are incredibly high, and it kind of blends a little bit into this this distinction that you've been talking about in your report, where there's the model builders and there's the business applications. Actually, what makes you be super successful is being both the model builder and also owning the application and having this whole vertical stack. And that was always our thesis.
That's super interesting. I'm going to move on to you, Elodie. I'm also based in Abu Dhabi, in Hub 71. I've been there for the last 2 years. Previously lived and worked in Singapore, Silicon Valley for 10 years, London, of course. And one of the things that Jarek was just talking about is this customer activation. That's something that we see across the world, is where the ecosystems are really going to be able to grow. It's not just funding, it's not grants, it's really about customers. So I know that in Abu Dhabi, the team and the ecosystem are really working on how do they attract, retain, grow startups for the GCC and the wider region from Abu Dhabi. Can you talk a bit more about how, the adoption of technology with these corporations, how do we get there with them? Because that's the challenge. It's not the technology, it's the other side, it's the buyers, right?
Yes, definitely. So giving a little bit of background, in context about Hub 71, we are the global tech hub from Abu Dhabi, the capital of the UAE. We were born around 6 years ago as a startup ecosystem, and our objective has been to be able to have a GDP impact and diversify the economy away from oil and gas by being able to support the local tech founders in the region, but also attracting, founders to build that new economy with us. If we look at our journey, we are now home for more than 350 startups. And from the beginning, it was very critical for us, not to focus only on fundraising, because of course, that's the metric that we are using in our industry to speak and rank about success. But I think if you go back to basic, which are why a company is built for, a company is built to be profitable. So that's why for us, from the beginning, we created a value creation team before even looking at other programs or any specific verticals, we wanted to support. But we built a value creation team to be able to help our community to access market. That was the first one. But also, of course, funding, but also being able to work with regulators and government. And the last step was to help them also international expansion, by building cross-border programs. When we built, the team looking at access to market and bringing the partnership with the corporate, what was very important for us, because as this is the topic of today's panel, we were an emerging ecosystem. So most of the big corporates or national champion we had in the UAE at that time were not used to work with startups. And we know, especially by supporting, early stage founders, that it's a race against time. You need to access market and as fast as possible. So that's why we spent a lot of time working with corporates into that journey, making sure that they understand that POC need to be paid, pilot need to be paid, it's not for free. And making sure that also their own processes were ready. You know, when you want to work with an early stage startup, you can't ask them for their 5 years audited account. That doesn't work, you know. So making sure that the procurement processes, budget were allocated, and that was a hard work that has been done by the team since we were created, and now it's paying back. If we speak about figures, our community of startups have been able to raise more than $3 billion USD in funding, speaking only about generally pre-A, post-A companies. And we've been able to facilitate, and to help them access to more than 1.7 billion USD commercial contract. So that was really, encoded as the heart of what we were building. And I think now most of the people are coming, to build their venture and build their technology in the UAE, especially in AI, where we've been ranked in your new release report, the second most active ecosystem in MENA. So they are coming with us to be able to access, these different programs that our local corporates are putting in place. If we go back to AI, we have very interesting figures, in our country. It's now representing around 13% of the GDP. So that's a journey that we started a long time ago. And when you look at the workforce, 80% of the employees in the UAE are already using AI tools. So that is maybe also something which is very important in our part of the world, is that we are really embracing innovation. Our regulators are also embracing innovation, so that helps us, move maybe at a faster trend than other regions in the world.
Thank you. And I think some of the things that we look at is talent. There's a war on talent everywhere, always. It's always been the case. And we're kind of looking at what is the entrepreneurial talent now. It's people who are industry experts who can use AI that's already there. So I think that there's a real shift in the world of how can emerging markets really grow faster, but not using the traditional ways that we thought, attracting engineers, attracting, academics, that kind of thing is, who's been working in these jobs for 20 years, who knows there's a better way of doing what they do. London, UK is not an emerging market necessarily, Suzanne. I'd love to talk more about and understand more about sovereign AI, because I think the model that you're building there is really interesting, and I think that's something that we'd really love to hear about, and what challenges it is that you're trying to solve in the UK.
Sure. Well, I started in the job 3 weeks ago, so I'm still getting up to speed myself. The fund itself is now a couple of months old. It's based in the UK. Our sole investor is the UK Treasury. It's a £500 million fund targeted exclusively on investing in UK-based, UK-nexus companies in the AI space, both the sort of AI native companies and AI companies sort of reinventing traditional industries. Our first 3 investments have been in that AI native space, which pretty much reflects the chart that we've seen earlier. We're also really excited about the potential for AI to deliver improvements in, broadly areas that government delivers public services, whether that's healthcare, education, those categories where the wave 1 of technology really has not yet delivered meaningful productivity improvements, where the cost of goods and services for the population are getting more expensive with each passing year rather than less expensive. And I think we're really hopeful that some of the improvements in AI will deliver not only better services, but also at a significantly lower cost. I would challenge your last point that the founders are largely domain experts. I think that's simply not what we're seeing at the moment. Mm-hmm. If you look at, the founder of Europe's leading legal AI business, I think Max from Legora is probably in his mid-20s, had no previous experience in legal, and he has simply out-executed all of the domain experts in his space. Ditto, the leading European player in financial services, sort of AI tools. So what we're looking for in founders is actually quite different now than it was 5-10 years ago.
So it's really looking at people who can see there's a problem in looking for the solutions for that rather than, just people who maybe are sat in a corporate job and thinking, I want to be an entrepreneur, how do I jump across there? I think it's probably a collective of those things, but I completely agree. Working with some of the, people coming out of these universities have got incredible brains. Jarek, what do you think about Suzanne's comment there? Where are you seeing in your community of founders, of leading founders around AI? Where are they coming from and what's driving them to become founders?
I think relentless execution is what you're looking for right now,
Right.
and this is what we're seeing the most. I think maybe like even technical competency is slightly less valued nowadays. Like I'm coming from a research perspective, I would be probably a founder of more like a AI research model lab nowadays too, rather than one of those business execution functions that just build on existing models. Right. And I think those are really valued right now in the market. This is where a lot of the action happens, and I think that's also like a lesson for us who founded a couple of years ago to make this shift towards execution, this being the most important part, because it's a land grab nowadays, and the pace is just astonishing at this point in time.
And then something Suzanne said is that what they look at in founders now is very different to what it was 5 years ago. Naomi, can you talk a bit more about in Tokyo, what you seeing the changes are in the founders that you're starting to work with within JETRO?
Yeah, I'm working for a Japanese government agency to support. Now we have like 2,000 startups in our portfolio, which are ready for going global. And now we have more and more, how can I say, the day one global, from day one thinking global startups, and going more to Silicon Valley from day one.
Yeah.
And also we have more and more AI native startups, and most of 100% of startups are using AI in our portfolio. And on this discussion, I think Japan has a kind of advantage in several domains, like entertainment industries and also manufacturing places. So in that point, we have advantage. We have a domain experts, and also we have a domain data, which can be used for AI. And so those kind of sector, vertical AI, agentic AI, we see more and more startups from Japan.
Gotcha. And Suzanne, when we talk about sovereign AI, what was the problem what was the challenge, not a problem, in the UK that you were plugging that gap? Because this investment is pretty good. From my understanding, I'm not there anymore, but what exactly was it that, just so that we can think for other leaders from other ecosystems, what are you trying to plug there that the government intervention is going to support the growth?
Sure, I think like lots of other European countries, the policymakers in the UK felt there were significant gaps in UK capability in the sovereign tech stack. And that doesn't mean that we want to be entirely self-reliant. That's not possible. Even the US isn't totally self-sufficient. They rely on, ASML, TSMC for their NVIDIA chips. So the goal is not to sort of cut off the US or global players. That will always be an important part of the mix. But I think we felt that we wanted to be, as a country, an AI maker, not simply a taker and a buyer of international tools, largely US tools, as the report showed. And there are certain categories where we felt that the UK had an edge and a potential to create globally significant players. Take like hardware. There's one emerging UK chip business, Fractile, and we can support them, for example, with an advanced market commitment to say, when you meet these technical milestones, government will be a purchaser of your chips. And there are other categories. Let's stay in the chip space. There's a company called Olix. They do photonics chips. in France, you guys are very lucky with your energy prices. In the UK, people pay significantly more for energy, and therefore we have to be thoughtful about what we will need as a country versus others with cheaper energy. And one of those categories is, photonics chips deliver similar performance for significantly lower energy costs, and therefore it makes sense for the UK to be a home for, leading companies in that space.
So it's not completely about just concentrating, but it's working from the UK, but then also having that global connectedness, which I think is super key for any kind of growth, isn't it? And Elodie, in Abu Dhabi and the wider UAE, they've invested a lot in AI for a long time now. Where do you see emerging markets who are growing significantly, have funding, trying to grow in this space? Where are their advantages compared to, the traditional ecosystems, the New York, San Francisco, maybe not San Francisco, the Londons of the world? Where do you see emerging markets being able to kind of take advantage of this time and place that we are with AI?
I think, for this, you need to, as you were saying, the UAE has been investing in AI since a long time, but I think that what a lot of people doesn't know is that the country is starting to look at that particular vertical industry 20 years ago. So Mubadala, one of our sovereign wealth funds, invested and took a major stake in AMD in 2007, 2 years after they bought some spin-out lab from AMD to create Global Foundries. Global Foundries now being one of the main, players in manufacturing of chips, being 100% owned by the UAE. So this journey is not new for us, and we've always been resilient with that industry, even in time where it was like a little bit difficult, We were the first country to have a ministry dedicated to AI, and this was in 2017. So again, we were already embedded that vision that AI will be the next technology that will disrupt our economies, and we really wanted to embrace it. The fact that we are a young nation, we don't need to deal with legacy. So that's why everything we are doing, we are really embracing the future, and being able to build for this new type of economies. Mm-hmm. And I think especially, in Abu Dhabi with the recent creation, a couple of years ago of MGX, the rise of G42, which is our national champion in AI, the fact that we've been able to support, also access to computing capability with the Stargate program. A lot of people are speaking about the Stargate program in the US, but we are also building our own capabilities in Abu Dhabi. So we are offering, to tech startups that will come to our ecosystem. On one side, the compute capability they will be needed. On the other side, like government, local corporates who are embracing that new wave and are looking for new solutions to be able to make it more profitable. And on the other side, also building the ecosystem of talent we would need to be able to support that new wave. We also been the first nation to create a university entirely dedicated to AI, which is MBZ UAI. And I think that by the combination of these different elements, that gives you all the tools you will need to be able to grow that economy.
And as we're looking at what we should be doing differently as founders, policymakers, investors, ecosystem leaders, Jarek, as a founder, what do you think that, if you were given advice to new founders coming up through the ranks, new entrepreneurs, what's the best advice you're giving out to people who are coming to you at the moment around this next wave?
I think I would first say pick the right place to be. And I think there was a lot of conversation around kind of what is the emerging areas. I think out of the experience of having founded out of a city that is not on this list anywhere, really, and I'm very proud for that. And I'm really, really, really lucky to having founded in Cologne, I think. But now speed matters a lot, talent matters a lot, and you want to be in a place that is really somewhere on the top of this list, and you pick and choose which one it is going to be. I think the times of where you could kind of start from a random place in this world are gone. And also, I really want to foster those centers to be as strong as possible. We are distributed enough in Europe. Let's strengthen those places where we can where we already are. That is maybe number one. And the number two is work really hard. I think this is a time for working really hard, and we should, as a society, we should appreciate that. We should be proud of those people that want to go on this journey. But as a founder, you also have to do this inner dialogue with yourself and sign that contract. Hey, this is gonna be a super fun and super interesting journey, but it's gonna be a hard one.
Yeah, it's going to be hard for a few years, yeah. And one of the things that we measure in the GSER is global connectedness. And we find that founders who are connected to someone in Silicon Valley grow their businesses 4 times faster than anyone else. And that doesn't mean that you have to live there. I have personal experience. I was there for a decade, and it completely changed my life and my career because of the density of conversation and the connections that you make. And we see, founders from other markets who are there regularly, not necessarily living in San Francisco or Silicon Valley, but actually having those relationships, who can open up things, having those conversations. I think it's very similar in London as well. It's such a multicultural city. People are in the Valley a lot. I was at the UK government previously there, and we had a lot of initiatives to make sure that our founders were connected to founders in the Valley for exactly that reason, is that connectedness, that global connectedness really kind of helps with that. And with Japan is so far away from the Valley in a sense. And you're saying that lots of the founders are now global first. What kind of advice would you be giving to your policymakers to support the founders on that journey?
So actually, we support them to set up a diversity corp in the US and also getting visa in the US, because without funding from the US, you cannot be a unicorn. And our target is to make unicorns more. And for example, the Sakana AI, which we can name it like a sovereign AI startups in Japan, which is the biggest in terms of valuation. I think 2.5 billion USD as a private company, which is the biggest. And they got funding from Kuester Ventures and NEA and Lux Capital, which is a top-tier US VCs. So that's why we are trying to make Japanese startups to connect with those ecosystems in the US or global ecosystem.
And JETRO have outposts in all of these key markets to support those Japanese companies and companies trying to expand into Japan, right, as well?
Yeah, we have 76 offices, but to support startups, Silicon Valley or San Francisco office is most important one.
Yeah. And Suzanne, if you were going to give advice to investors, maybe what are they doing wrong in other markets, or what are they doing, or what do you think they should be doing more of? So it's a flip of both coins there. Sorry, that's 2 questions in one.
What are investors doing wrong? I think, look, all of the big US funds are in London, and that's ultimately great for founders. It means that they don't have to get on a plane to San Francisco to get exposure to the capital that is still probably most willing globally to take significant risk. But I think, still in the UK, it is pretty challenging to raise serious capital if you are outside London, Oxford, Cambridge. I think we are starting to see that in 2nd and 3rd tier UK cities, there are some really strong businesses emerging, of course out of the universities, but also unrelated to universities as well, because I couldn't agree more that what separates great founders from decent founders at the moment is just sheer execution. And there is limited correlation between ability to execute and where you're based.
Yeah, I completely agree. And Elodie, if we're thinking about ecosystem leaders, are they measuring the right thing? We have a lot of, we want to have 30 unicorns by X, or we want to have this, that, what should ecosystem leaders be thinking about right now, and what should they be measuring to make sure that the growth is realistic?
So we love metrics, and we measure a lot of them. I think, of course, attractiveness, as we are building a new ecosystem, is very important. Last year, we managed to get more than 5,000 applications of startups with a growth of more than 60% compared to the year before. But the point is not about the quantity. I think the point is about the quality. And summarizing, what we've been discussing previously is that how you're able to build a successful venture, how you are able to measure the exits, how you are able to measure like real valuation of these companies. And I think the fact that our community have been able, to constantly fundraise and have like still access to the market, especially when we went for that winter time, is an important sign that the region is very active, is growing maybe faster than other regions in the world. And I think that's the sign that we want to send to the founders, especially in that AI vertical, is that we have already all the tools, and it's just the right time to come and be able to embrace the growth that this wave will have as an impact in our economy. I was saying that today, I represent 13% of our current GDP. We are expected by 2030 to represent more than 40%. So we're speaking about a market of like nearly 45 billion USD. This is a huge growth to embrace.
Yeah, that's great. That's really a growth, isn't it? Suzanne, I'm going to ask you, where do you think people are missing the biggest opportunity in AI right now?
Good question. I think we think there are lots of opportunities still in sort of unsexy spaces or spaces that are going to take a long time to play out. I think one of the challenges of Anthropic and Lovable and 11 Labs growing so exceptionally quickly at rates we've just never seen before is that if you're trying to raise for a fusion startup or something in the deep tech space, which is going to take 5+ years until you get close to commercialization, that can seem pretty unattractive at the moment. And as a sovereign fund, we can take those longer term risks and a longer term view, but it's probably more challenging to find really high quality co-investors for those opportunities right now.
How are you going to do that then? What's the plan to bring in those other investors?
I think what we can do as government is provide things like advanced market commitments so that we can, if we say to a chip company, we will commit to a 7, 8, 9-figure contract when technical milestones have met, that fundamentally changes the conversation when they walk into the investment committee at their next fundraising round, where they can say, look, we have government as our first customer, and we will be a serious reference customer, and other customers will hopefully follow. So we can pull some levers that only government can pull to hopefully change founders' fundraising trajectory.
So it's more than just signaling that we think this is a good company. It's actually putting the demand on the table, saying we are going to buy from this company, which completely changes the way that anyone would be looking at it. And I think that's something that's quite unique with what you're doing at Sovereign AI. It's a lot of organizations, governments will say, here's our top 50 companies, that's it. And it's a great signal for investors, but it's not saying, we've already got customer of X, ministry. And Jarek, I'll just come to you for the last few points. If there's policymakers in the room right now, tell us, what do founders need the most to succeed in this current era? Do they need to get out of the way, or do they need to have more sovereign AI?
I think founders have to rely on themselves. I mean, first and foremost, I think no founders should expect support from governments. That is kind of my central thesis about the market in general. But I think AI becomes infrastructure. if we look at how public markets in the US have grown over the last years, this is all driven by AI. This is all driven by tech. And we kind of all tend to speak about AI in our bubble here. I don't think kind of the mainstream politics and the understanding in governments across Europe specifically has yet reached that level that is required for this importance of investment that is going in there. And yes, amazing that the sovereign AI fund is being launched in the UK. Maybe it should be 5 billion or 50 billion rather than 500 million. And if we look at, I don't know, I would love somebody to make this study of how often prime ministers in different countries have used the word AI throughout the year, and maybe compare that and do a little bit of a competition. I think we really have to build this mentality that this is what is going to be defining our economies in the next decade, and how, like, basically work each and every day on creating this ecosystem. And that's everything, basically, like making it easy to open up companies, making it easy to make them investable, make sure that the labor market or the labor laws like work towards that, make sure that AI regulation is appropriate and competitive across continents, like creating this whole thing, but also really preparing the society for that change and creating like basically some love for the tech companies out there in the society. I think we really need that.
And that takes us a little at a time, just a minute over. And I think that's a great stopping point for us, is for ecosystems, let's not wait to see what happens in Silicon Valley. Let's drive our growth. Otherwise, in 2 years, we're 10 years behind the valley, basically. We will never catch up if we don't start taking risks and working towards, finding these amazing founders, investing into them. And really trying to have that as a global community. But thank you very much for your attention, everyone. And thank you very much for our panelists. It was a great session. Thank you.